Oil reaches $100. Let's take a look at the best in breed in the energy space. I'm Jill Malandrino with the Streets Options Profits.
And I'm Scott Redler, Chief Strategic Officer at T3Live.com.
Let's review ConocoPhillips today, ticker COP. It's up 18% on a year-over-year basis. It has a nice, healthy dividend, although shareholders are screaming for management to do something with the cash and take it up a bit. But we have this diversified company, nice integrated oil name. You don't have all that refining risk because they do have other facets of the company, not just that refining space, which tends to be the most volatile in the energy names.
Yeah, and I like this group. Based on the fundamentals you just said, I've also seen a technical setup on this one as well as a few others that look very juicy for short and long term. So if you look right here at the chart of COP, you will see that this is holding in very well. It came back, retested this prior breakout. I think last time we were very hot with this group. It broke out to the upside, met resistance, came back in. Here was your tier 1 entry into some support. And now it looks like it's in the game. It's responding well with the market. And you do have this downtrend right in front of it. I love downtrends because when they break, they typically go fast to the upside. So I would say if you're in a tier 1 in this area, wait to see how it handles this downtrend. If it can go sideways just a little bit, when it breaks through this 72 and change, it could see 76 to 78, pretty quick.
So one way you could play this from the options perspective, and Jared Woodard of Condor Options is going to give us a more in-depth options play. There, you have that risk with oil hitting $100. That's where the volatility comes in. So if you have a bullish bias, a way to play a name like a ConocoPhillips and ExxonMobil, which is another outperformer that Scott likes, you can, instead of going just long calls because you have that exposure with the oil prices, you could do something like calendar spread where you're shorting in near-term call and going more long on an outer call, and that's kind of how you have your controlled risk, a little bit less of capital outlay, and you also mitigate that oil price.
So that's a great strategy, and if you just coordinate it with the pricing and the movement of the charts, it can be very powerful. And just real quickly with XOM, I like when groups can move together, so at least there's more bang for the buck across the board. Look at XOM here on the chart, you'll see very similar. Okay, this is the first time we listed XOM when it broke above this resistance, went to that same resistance and failed. Came all the way down a little further than anyone would have liked to retest it, and then pow, right back up to that downtrend. That's powerful. So with a little sideways action, this too could break this downtrend. So at least you could watch the group together. So if you see Exxon start to break that downtrend and get strong, I think COP will follow suit or vice versa. So not only do you have two strong stocks, you have a group that's starting to get institutional attention even more.
And that's what we look for, relative outperformance, when we're picking our trades. Thank you, Scott.
My pleasure.